Good morning, this is Sheldon here from the Currency Advisory Desk. Well, we end this week preparing for the upcoming financial storm next week. Yesterday, we got the WPI figure and it was worse than expected at 7.55%. This is a double whammy for the folk at Mint Street, numbers that came out IIP and all. And the other side, we have ever increasing inflation, which was we observed yesterday with the WPI figure. However, we expect a rate cut from the RBI coming next week on the 18th of June 2012 when the monetary policy will be reviewed. The US dollar index is trading at 82.10. It's down by around minus 0.10%. Now, the past few days we have witnessed a lot of volatility in the rupee movement. However, we have noticed that the open and close is at the same level for the past few days. So even though that the opening and closing of the USD INR, the USD rupee pair is at the same level, the movement is huge intraday. Now in technical terms, we call this as a doji. Now, the doji basically means that the markets are in a neutral mode and are now awaiting for some sort of a direction. We expect the future next week events to give some sort of direction to the markets. Also, we expect the dollar to trade in a range of around 55.20 to 56 for intraday today. The Spanish bond yields crossed the psychological level of 7% yesterday after Moody's cut the country's credit rating to just one notch above junk. With Italian 3-year benchmark bond yields rising to above 5.3%, the euro is in a very bad shape fundamentally. We recommend a short sell of the euro against the rupee for any intraday position that you might take. Internationally also, the euro against the dollar is trading at 1.2644. This increase in the euro dollar pair is primarily due to the deteriorating economic situation in the US. Yesterday we saw some data come out of US which was very negative. We saw that the unemployment claims and the current account deficit both increased substantially. And this sort of data raises further hopes for some sort of indication of quantitative easing or QE3 during the FOMC meet, which will be held on 19th and 20th June next week once again. Today we will get the trade figures for the trade balance of UK. Expectations are there for an improvement in the deficit. However, if the deficit is worse, we will see a sharp sell-off in the pound against the dollar. We have to keep in mind that when deciding our strategy, if the trade deficit is worse, then obviously due to the sell-off in pound, the pound will fall against the rupee also. So what we feel is that we can short at current levels, because even if the data comes as expected or is slightly bad, the impact of a sell-off will not be as much. I mean, if you go against the trade also, if the position goes the other way around, you won't get much of a upside on the pound. Moving to Asia, well, the Bank of Japan did not announce any policy changes today at their press conference. The Bank of Japan announced that they are holding on to the current interest rate scenario till the Greek political situation settles. We expect the yen to be very volatile due to its safe haven nature. Now, as investors turn into risk-on mode as such, the yen will fall sharply. Now it's trading at 78.89 against the rupee, and we recommend a short sell in the yen for minor gains. So we must note that central banks world over have not made any major policy moves this week. We see that everyone from hedge funds to sovereign wealth funds, they are favoring to be in cash. There's a big reason behind this is the events that are going to unfold next week will probably decide the course of markets for the coming 3 to 4 months. So we also advise our clients to avoid taking any overnight positions today and trade very cautiously next week, as the markets are going to be very, very choppy. Well, that's it for today. Thank you.